All right, good morning, everyone. Can you hear me? Hopefully we're all set to get started here. It's just a minute past the hour. We're still letting people join. There's a long list of attendees that were going to be in this session. So first thing I want to mention is, since we are in a webinar situation, if everyone can keep themselves muted, unless you want to present, which I'm happy to have as well. And also turn your cameras off so that it's not a distraction from the slides that we're going to be presenting today. That would be great. And Brenda, if you want to go ahead and go to the first slide, that would be great. Today's session, we're going to do, again, some refresher information on the PPP loan forgiveness. We've had a lot of seminars so far, and Brenda has taken us to our slide here, which is a CBM slide that shows all the things that we've been doing. And before I get to that, I'm going to tell you I'm one of the presenters, Angie Prochaska, and the other presenter is Brenda Haase, and we are both managers in the tax department at CBM. And we are one of the group that's going to help hopefully get everybody through this crazy session, with all these different changes that keep coming up, including one that came just last night. So we're going to try to keep you up to date. And this slide here, it also helps to emphasize that we have done a lot of these presentations already. And today we're not going to start from the beginning, but we're going to do a lot about terms and things like that, but we're going to focus mostly on the things that have changed since we have gotten into, at this point, because even here in August, there have been several different changes that have come down the pike. And so we can't start from the beginning, too much information to cover. But we do have here on our website at cbmcpa.com, there is a tab for the coronavirus COVID-19 information, and on there there's just loads of information. We have a bunch of these sessions that we've done before. This is, I think, our 4th round of sessions that we're doing, and we usually do 3 or 4 each round. So you can see we've done quite a few since mid-April, and those many of them have been recorded. We started recording them about the end of May, I think, and so you can go back and watch earlier sessions to kind of get the lay of the land from the jump if you need that. But now we're going to talk more about what's happened since then. And so at this point, you can see that on the slides, for those of you that are online, many of you may not know CBM, and we've been around for a long time, almost 100 years. And recently we had a write-up in the Washington Business Journal back at the end of May. And I thought it was interesting reading this slide again, which was, we have more than a dozen virtual meetings that we've done. And actually now it's probably well beyond twice that. So try to keep up with us, and we're going to help you get through this as best we all can, as it changes every day, it seems. So the next thing we're going to talk about is just sort of where we are, the overview of things. And the main thing everybody wants to get to is the bullet that's at the bottom, which says 100% forgivable if you meet certain conditions, and that you can also get partial forgiveness. It's not an all or nothing kind of thing. With this slide here, you see we got started on this way back in March when all of this coronavirus came up, and now we're trying to just make our way through all the different changes that have come along the way. We started out saying that once you get this PPP loan, which many of you already have done, and you can see there that there's originally we started with 8 weeks for the period of time to use up the money, and then we would go for the forgiveness and try to get the loan forgiven so you don't have to pay it back. But they've changed that and went to the extended 24-week period, or until December 31st, whichever comes first. Most of the money is out there, so we're not 24 weeks out before the end of the year. So the borrowers have the loans all dispersed before June the 5th. You can elect the 8-week period still if you get your funds spent and you think you're going to get 100% forgiveness based on that 8-week period, or you can opt to change and go for the 24-week period. Anybody who got their money after that June 5th date will be in the 24-week period. And we're going to talk about what happens if you're somewhere in between as we go along. So some latest things that have happened. They've opened up the portal. The SBA has opened up the portal so that you can start to get the applications for forgiveness ready to go. And they're not doing any more as of just a week or so ago, August 8th. Tax professionals, that includes all of us, are advising clients to wait for further guidance to file for forgiveness, but go ahead and start getting ready. So the reason for that is there's so many changes that are coming all the time. And I know everyone's anxious to just know that whatever they got is forgiven and they can move on and put it behind them. But because these changes are coming all the time, sometimes that's not so easy to do. And with some of the changes coming along, it may benefit you to wait, but not to wait on getting organized. So you want to get all your things together that you're going to need, all the documentations on that website that I mentioned on our CBM CPA website. We have some great tools there, including a spreadsheet that helps to calculate some of these payroll numbers that you need for filling out the application. But a lot of folks that have outside payroll companies like an ADP, they have some really good payroll reports available through that third-party payroll service as well. So be sure and check with your payroll company if you do in fact have one, rather than doing it inside your own organization. So you want to get all those things together so that you can follow through on all these tests that Brenda's going to go and discuss as we go along. And if you wait till the end and you try to gather all that information, it's going to be tough to keep up with everything. So we're going to go through and we're going to talk about all the different things that are impacted by this. So including one of the big things everybody's really anxious to hear about is what's the tax treatment of this forgiven loan, including what happens with the expenses that I've used in filling out the forgiveness application. Do I still get to deduct them? And as of right now, the answer is no. We don't know that that's going to change, nor really expect that it will, but it's the one issue that comes up quite a bit. So we're going to keep our eye on that and see if anything changes. But in the meantime, we're going to have to consider what's going to happen, not only for the year that we're in, but how we go into the following year as well because of that. So they're still working on it. They're still looking at different changes that might come down, including extending it, offering more money, having another round, et cetera. And we don't know what that's going to be yet until we get there. So we're just going to keep listening to it and see what happens. One thing that's out there on the horizon, which I think is my favorite, but probably a lot of you will find the same thing, there is potential for an automatic forgiveness for loans that are less than $150,000. They're looking at that because through all the negotiations that recently failed in terms of trying to decide what is next through Congress, they've come up with the statistics that show that 86% of the loans are below 150, but it doesn't account for a large percentage of all the money that's been paid out. So that's only 26%. So they might decide to kind of come up with a shortcut there. And, you know, we don't really know what that would look like if they did, but it might be something like some sort of a form asserting that you did use the funds for what they were used for, et cetera, and calling it good. But again, this is only a thought that's out there right now, something they're working on. It's not the way it is right now. So right now, we're still going to have to go through all of our calculations. And again, this is only up to 150,000. So if your loan was more than that, you wouldn't get to fall under that little exception if it does come to pass. Another question that we've gotten quite a bit from folks is, what's happening? My bank's not ready, or they said I can't fill out the forgiveness application just yet. So we listed a couple of the banks here and where they are in the process. It's usually the bigger banks that are not really quite ready. They're not ready to start accepting it. And I think it's in the same lines. They've got a lot of paperwork to do on all of these. And if they can eliminate some of them going down the pike, we might be able to do that. So also as a note for those of you who are listening and not online with us, at the end of the session, we are going to send out the slides. So you'll be able to see these dates and banks and what it means for you. So in general, the last point on this slide is just general uncertainty. And the reason for that is there are these ideas out there, things that could happen, things that might change, but they haven't yet. So we just have to keep waiting. But I think that brings up a lot of questions for all of our clients or potential clients, our friends online here that are, it's just that uncertainty causes a little bit of anxiousness and brings up a lot of questions. So in our slides as we go through, we're going to look at answering as many of those questions. Many of you submitted some questions online before we got to this morning, and we will try to cover all of those as we go through and or in a separate session at the end of this. And then if you have any questions as we go through that you haven't submitted earlier, then you can submit them here in the chat box. And we're going to try to keep up with those as we go through also, especially once we get into the actual numbers and what's what and what goes where. The terminology can be confusing, etc. So this information here is really just the changes, and you see the dates there, and including the last one, which says August 24th, which is yesterday, as things are changing. And so we did actually make a few changes to the slides even this morning just to cover the changes as they've come up on the fly. So there's just been different things throughout from the time that it was initially passed to the different clarifications in terms of what do these terms mean? How do I fill out these forms? What do the forms look like? And now we have an easy form, though most say it's not that easy. It's just a little easier. And so we'll get to those forms in a little bit as well. But one of the big things that just came up a week or so ago on August the 12th was the SBA added some more questions to their frequently asked questions. Because those are frequently asked questions, I thought it would be a good idea to go through some of those for everyone who's here with us today and talk about those things, because if they're questions for other people, you might have the same questions as well. So we're going to start here. This is the beginning of that section. And this is just to kind of give you an idea of some of the other things that other people are questioning. So loan forgiveness applications. And as I mentioned, there's this new EZ form, 3508EZ. That form is for sole proprietors, independent contractors, and self-employed individuals who have no employees, and they are filling out the loan. They can use this. It just cuts out a few steps. Some of the questions that we received ahead of time were things like, well, if I have this and that and several other things, can I still use the EZ? And in some cases, you won't be able to use that EZ, but you can still get potential forgiveness. And I think that goes to another thing that I think everybody's kind of looking for, a quicker way to do this or a way around it or a shortcut. And if you know one, let us know, because there really hasn't been any kind of a shortcut. So this EZ is as close to, a little bit of maybe shaving off a couple of questions that you might have, but it is a process to get this forgiveness ready to go. So that's just a new form that they did for specific individuals. So we have one of the questions that was brought up by the SBA. Can we use scanned signatures and e-file signatures and things like that? The answer is yes. All of that is fine and acceptable these days with many of us, like me, at home, instead of being, someplace where maybe you can get those signatures firsthand. It's not that easy. And so none of that's a problem. All's okay with that. And then the timing of the payments. So everybody's not going to get 100% forgiveness potentially. And so as long as the borrower submits the loan forgiveness application within 10 months of the completion of your covered period, then you can make the payments after you hear about the forgiveness. and it will be remitted to the lender by the SBA. So everybody will know exactly where you stand. And that will mean that you have forgiveness of partial payments potentially, and the rest of it's going to be paid out over 2 to 5 years, depending on when you got your money. So we have here the interest rate is only 1%, so it's a good deal. Even if you don't get 100% of forgiveness, at least it's a easier payment with just the 1%. It's deferred for 6 months. And then when you begin the payments, it's either, as I said, 2 years or 5 years, depending on the date that you got the money. But one thing that has come up is that if you did get your money earlier on and you talk with your lender, you may be able to go ahead and use that 5-year term anyway, if that works better for you and cash flow, et cetera. We have some questions about the way that payroll costs are accounted for in terms of the forgiveness, because in the language, there's a lot of discussion about either accrued or incurred or paid. So most folks here are accounting folks, and you think, well, don't you have to pick one or the other? And in this case, it doesn't really seem like you do have to, but they issued some clarification on some of that, because I think in and of itself, it is confusing, because we usually tend to say either we're accrual or we're cash, and now we're kind of picking and choosing as we go along. So these next couple of points here are about how to account for that. So payroll costs incurred before your covered period, but paid during the covered period are eligible. So that's the cash paid out during the covered period, you're good to go. Payroll costs paid on or before the next regular payroll after are eligible also, because those were incurred during the period and you're paying them after. So that's where that mix comes in a little bit there. Borrowers who have semi-monthly or monthly payrolls, which I think is a lot of us, need to calculate payroll costs for partial pay periods. So if your covered period ends in the middle of that pay period, you're going to just prorate that pay period so that you can calculate exactly how much you would be eligible for on the forgiveness application. If you're biweekly or weekly or more frequent, then you can elect to use an alternative covered period. And the purpose there is so that if you can shift it a few days down the road, you can get your covered period to be your payroll period. So it makes it maybe a little bit easier to account for those payroll costs. Okay. Payroll costs include all your cash compensation. Often questions that we've had are, what about bonuses, or what about commissions, what about tips? And all of that stuff is in your compensation, limited to $100,000 on an annual basis. One quick point here at the bottom of this slide, which is just sort of a side point. Borrowers who got the EIDL, we sometimes call it the EIDL advance, and that was a $10,000 advance that you could have gotten at the beginning. Anything you get on the EIDL is subtracted from your PPP loan as far as forgiveness. So if your EIDL was larger than your PPP loan, you're not going to get the forgiveness because you'd be in a negative situation there. So you're not going to be eligible for it. So you got that EIDL sort of free and clear. It comes off of that loan amount. Okay. And on the next slide, we have, this is just a little bit of a clarification here for two major points outside of just your regular payroll for whichever period. And both points are very similar here. So it has to do with the health care and the retirement benefits. So in both cases, we've had a lot of questions about, what if I pay it here and what if I pay it, before or after, and all those kind of things. So we just clarified here that those group health care benefits that are paid or incurred by the borrower during the covered period or the alternative cover period, if you're using that, they're eligible for forgiveness, and you can't accelerate payments. So if you've got payments, people have said, well, what if I go ahead and pay the rest of my health care for the rest of the year? now, which is fine to do, but that's not going to get you numbers for your forgiveness. So you can't go, outside the covered period to ramp them up in order to get to sort of where you want to wind up. Okay. And the retirement benefits, really the same thing. We're really looking at the employee benefits, whether it's healthcare or retirement, that are paid during this period. Your regular scheduled payments for either one, and those are going to be allowed. Taking note in both cases, and this is fairly logical, but worth saying, that the employer costs don't include those things that your employees are paying. So if you're paying most of either retirement benefits or the health, but the employee is kicking in some or deferring some, all of those costs are employee costs, not employer costs, and they are not eligible for the forgiveness either. Okay, and so then it goes again to the non-payroll costs. Non-payroll costs incurred prior to but paid during the eligible period are eligible for forgiveness, and payroll costs incurred during the period but paid after, same story. So that logic applies in both payroll costs and non-payroll costs, making sure that you're on your regular billing cycles and regular payroll cycles, so that we're not trying to ramp up extra stuff that's from a different period. Okay. If you do elect to do the alternative cover period for your payroll costs, those don't apply to non-payroll costs. So the alternative covered period is really just to help you match up your payroll with the payroll period, just to make it easier, fewer calculations to do. You should, in theory, wind up in basically the same place, but it may be easier for you to get your detail that way using the payroll reports that you would get from your payroll service. Another question that came up is interest on unsecured credit eligible for loan forgiveness? And the answer is no. It can't be on these unsecured debts. Other types of loans can have interest as part of the non-payroll costs. And so then we talk about the $100,000 for the max per employee. So the CARES Act excluded from the definition of payroll costs any employee expenses in excess of the $100,000. And so the question was, do these exclusions apply to things of non-monetary value? And so no, the answer is no. The exclusion only applies to the cash compensation. So if you've got other types of benefits that are there, that doesn't come into play in terms of the calculation. And the final quick question there was, what about housing stipends and allowances? Are those payroll costs? And yes, they count as payroll costs. Okay. And on the next slide, we find the table that is, I think it helps to clarify a little bit for folks, because again, lots of questions have come up in this area as far as, well, if I'm this or if I'm that, or in this situation, do I get to deduct or include the health insurance and retirement expenses in the covered costs that I want to put on this forgiveness application? So this just gives a little table there to say who can and who cannot include those costs when they're doing the calculation. To me, it just makes it a little bit clearer, because a lot of times we hear the owner compensation, and we're talking about lots of different types of owners, partnerships, S Corps, C Corp, and of course Schedule C, and the answers are different for each one, so you have the table there to reference easily. And then we also have some cash compensation limits that are put into play. And so this is one area that just got changed yesterday, and it's not a huge window, but a little bit of something. So the calculations for your compensation as an owner are calculated with the numbers that are listed there. This is the way that they're calculated. There's not a different way to do it, or how about if I calculate it my own way? This is how we come up with it. 8 weeks, if you're in the 8-week period, owner compensation, $15,385. And you can see the math next to it, just so you can figure out where did they come up with this number, 52 weeks a year, we're doing 8 weeks, you come up to 15,385. Whereas if you go to the 24 week, you would think it would be the same logic, but of course it's not. And so we do the $100,000 annualized max divided by 12 months times 2.5, and you get only 20,833. But as of yesterday, owner employees with less than 5% ownership in a C or an S corp are not subject to this compensation limit rule. So that gives a little bit of leeway there for those folks. So if you're in a bigger organization or you're a smaller player in a C or an S specifically, then at least you have a little break there, and it can be just up to your normal compensation. Okay. And that kind of brings us to the end of the questions that were under the frequently asked questions, and covered a few things that have just changed and things that we just learned about earlier this month in terms of other changes. But with all that being said, what you really want to know is, okay, so how do I fill out my application? Lots of good things about what's changed and covering questions that people have had. But you still got to go through the steps. You still got to walk through and find, all the pieces of information that fit your particular application. And Brenda's going to walk through that to start explaining more of the details, so that maybe it makes it a little bit more clear. And I'll let her take it away from there. Brenda?
Good morning, everyone. It's Angie.
Yep, thank you.
As Angie mentioned, there are 3 forgiveness tests that may require a haircut. You have to walk through these tests and think about how they are accomplished with the spending during either the covered period or the alternative covered period, whichever applies to your situation, or if you have the option to use the 8-week period, you would look at either the 8-week or the 24. So the first one has to do with the general principle of the lending itself, which was set at 60% of your loan proceeds being used for payroll. So you just take a look at your payroll and your payroll costs and calculate 60% of that, or calculate what your payroll is as it relates to your loan proceeds. And if it isn't 60% or more, if it isn't 60% or more, then you would go to the haircut here, which is, we have an example here where you can see how you calculate what your forgiveness limit would be. So in the example, if you have a $100,000 loan and you spend $50,000 of it on payroll and $30,000 of it on rent and expenses, your loan forgiveness is going to be limited to the $83,333. In the next test, you're checking to see if your annual or hourly wages for those employees who weren't paid more than $100,000 during 2019, during your covered period, whichever period you're using, if the salaries have dropped more than 25%, when you look at your wage, your annual or hourly wage from January 1st to March 31st, so basically the first quarter of 2020. If you meet this, then there's no haircut for your forgiveness. But if you don't meet this test, then you have to move to this safe harbor that they have available. And this is in keeping with the, the SBA, the CARES Act idea that, want to maximize the amount of forgiveness available. So they've built in these safe harbors based on different situations. So in this case, if you are able to restore your annual or hourly wage level to that of your forgiveness application date, or December 31st of 2020, then you meet the safe harbor and there's no haircut. But if you are not able to do that, then you calculate your haircut, which is the amount of your reduction that exceeds the 25%. The third test is looking at your FTE and determining if your employee levels dropped when you're comparing the period, your FTE as of your over your covered period, then you compare that to your reference period that you can choose, and that is either February 15th through June 30th in 2019, or January 1st, 2020 through February 19, 2020. If your salary levels or if your FTE levels did drop, then you have to look at this exception when you're calculating your FTE. And that is that if you had a drop in FTE, if you have made offers to your employee, good faith offers to rehire them or to restore their wages or their hours, and the employee has rejected that offer, or if you were unable to hire similarly qualified employees, or if an employee was fired for cause or voluntarily resigned, or the individual requested a reduction in hours, then you do not have to consider those FTE as part of the drop in FTE. So again, now there are a couple of safe harbors that you can take a look at to still see if you're still within the FTE guidelines. The first one is that if you were unable to operate at the same level of business that you were enjoying on or your same level of activity before February 15th, 2020, because you were complying with guidelines that were issued between this period, March 1st through December 31st, 2020, that the guidelines were issued by HHS, the CDC, or by OSHA, then you meet the safe harbor. And this includes, states and local governments that had shutdown orders that were based on reliance on HHS, CDC, and OSHA requirements. Then there's another safe harbor if you don't meet that one, and that is that your FTE levels, were restored by the application date or December 31st, 2020 to the FTE levels during the covered period, or to the FTE levels during this period, February 15th through April 26th. If you meet either of the safe harbors, then of course you're good to go. And if you don't, then there's a haircut that is equal to the percent reduction in FTE that's applied to the loan amount. So going through those tests then is really the only way to get to the answer as to whether or not, your what your loan forgiveness is. And this is all detailed in the application that Angie discussed earlier. The next thing we wanted to do was talk about some questions that we have received in advance of this webinar. I think we covered the first one with regard to headcount maintenance. So if you go through the FTE test that we just discussed, you will be able to understand, how the safe harbors for the guidelines and how, firings for cause or resignations are included into the calculation of the FTE drop. The next one has to do with waiting for the bank to finalize their loan forgiveness application process and what to do in the meantime. And I believe Angie covered that earlier. Gather your documents, get organized, walk through the application, and just be prepared when they are ready to start taking the forgiveness applications. From a tax perspective, I believe Angie covered this also with regard to the deductibility of costs that are being paid with the loan proceeds. I believe there's some discussion about that continuing, so there may be something coming out before you submit your application. One thing about this is the SBA has opined that when you apply for forgiveness, you're to use the rules that are in effect at the time, and the forgiveness application will be considered on the same basis. This last point here on this slide, does the FTE requirement still apply if you exhaust all of your funds on payroll items? And the answer is yes. The 3 tests that I discussed earlier are required. So even if you pay all of your loan proceeds are used for payroll, you still need to ensure that you meet the FTE requirement and also the salary reduction minimum. The next point is about the latest news in the program. Hopefully we've covered that. Angie also covered the periods that you can use for calculating your forgiveness amounts. So I think that one is good. Angie covered paid and incurred also a little earlier. And then the next question is related to, again, the using PPP loan proceeds all for salary. And also, as far as when to apply for forgiveness, Angie covered that. 10 months, you have 10 months until after your covered period to apply for forgiveness. This income salary for myself, I believe that's related to self-employment, and we covered that on an earlier slide, and we covered the questions about the deductions. I think this next point here is very detailed. I would ask the person who submitted this one to please go to our website, the link that Angie provided earlier, and fill out the form, and someone will get in touch with you to go over these points to help out with figuring out what can be deducted, included, etc. This question has to do with the next one. If you use the 8-week option, can you apply 10 weeks of payroll and 3 months of other expenses? I believe the point here is what Angie discussed about what's incurred versus what's paid in the covered period. And yes, it is possible to include more than 8 weeks of payroll. And so that is possible. Just need to walk through the calculations and a calendar, actually, looking at the 8 weeks, comparing it to your payroll period and the monthly expenses as to when they're paid. And then we talked about the banks, when they'll be ready. As Angie mentioned, we believe a lot of them are waiting until the changes settle down a little bit. This next question with regard to affiliate accounts, that unfortunately is not within our purview of the discussion here today. So again, if this individual would like to reach out on our website, we can talk with them about that and see if we can help figure out how to get the answer to their question. So this next one is about using the easy form, which I believe Angie covered. And then the paid or incurred question again. With regard to applying early, once you have used all of the loan proceeds, you can apply for forgiveness before your 24-week period is up. The point being here that the salary reduction measurement will still be in place for the full 24-week period. So you would have applied for forgiveness, and then you would need to maintain your salary levels until that 24-week period has expired. So you can't reduce beyond the 25% after applying for forgiveness until that period has ended. I see that we're about 2 minutes away from wrapping up. Are there any questions, Angie, in the chat box that we could cover?
So I've been sending the notes back. Oh, I'm getting feedback. But I'm answering those as we go along. So I think you're okay to keep going with the other questions that you see pop up in the next few slides, because a couple of them were things that were asked about the easy, and I think there was another upcoming slide that we had questions on as well. So I think you're good to go. And we still have about 17 minutes because we were thinking of wrapping up early for Q&A at the end, but I think we're good.
Okay, great.
Okay.
So as far as the application itself, we've talked about the easy, and here are the points that are important for considering whether you should use the easy. So you're self-employed as a contractor or sole proprietor. You didn't have any salary or FTE reductions. So again, this brings home the point that you have to do, you have to go through the process still, even if you're using the easy form. You have to determine if your salaries drop beyond more than 25%, or if your FTE was reduced also. And then you have to be in a position where you didn't have any reductions, but you were unable to return to your levels of business measured as of February 15th for the reasons that we talked about related to the CDC, HHS, and OSHA guidelines. Otherwise, you have to use the long form of the 3508, and both of the applications have detailed instructions. This is what the tables look like for determining the FTE and the salary and hourly wage reductions. We walk through the specific instructions there. I just wanted to show you what that form looks like. It is by individual employee that you must do it, not in the aggregate. And here is the same calculation, similar calculation for FTE for employees who have an annualized rate of income higher than $100,000. The previous table was for those who had earned less than $100,000. This is the point at which on the Schedule A worksheet where self-employed folks would be entering what is considered their compensation. And then we talked about the safe harbor for FTEs reductions. And here are the points at which you enter the total payroll and non-payroll costs here. And these are payroll costs throughout the covered period, which actually could exceed the loan amount in some circumstances. And then this is where you enter in the forgiveness amount after going through the calculations. So I think we're here at a point where we're wrapping up. We just wanted to mention some upcoming events that we have. The first being the Grow Your Net Worth seminar, being conducted by two of the folks in our financial planning area, Jordan Eggert and Rima Patel. And then that's on September 10th. And on September 15th, Junie Barnhard, one of our partners and also a member of MBI, will be presenting with Thomas Macaulay, who is a partner at Carr Maloney, about adjusting to the teleworking, remote workforce, and HR and tax considerations there for employers. And on September 17th, Debbie May and Alan Selesnik will be providing a marketing update. And we'll also be having our certified nonprofit accounting professional training September 22nd through 23rd.
Brenda, we have had a couple of questions that have popped up here that I've been typing as fast as I can to answer them as they come in, but a couple of others that have come in, and I just want to double check with you as far as the steps that you just walked through. And one of the questions that we got was, if you've already spent your loan on payroll, but your FTE is still reduced, you can file safe harbor if you restore the FTE amounts before December hits. Is that correct?
Before the application date or before December 31st, whichever comes earlier.
Okay.
Right.
And
So if
you wait
that would be
for the
one.
forgiveness. I'm sorry. It says in this scenario, do you wait to file for forgiveness until your FTE counts are restored?
Right. So that would be a strategy for delaying, delaying the application such that you would be undertaking an effort to restore your FTE levels before December 31st if you're planning to apply around that time period.
So it would help you because you wouldn't be reducing your FTEs as greatly and therefore potentially getting a higher forgiveness.
It would result in a lower haircut, if you will,
Okay.
increasing the forgiveness amount. Yes.
Okay. And here's another one, which I think we talked about this morning a little bit off camera, which was if you can't operate during the cover period at the same level as before February 15th, does that count due to Governor of Montgomery County and the state of Maryland rules of COVID? So if the governments have said you can't operate and therefore you were reduced, how does that play into it?
That is one of the
tests.
Safe harbors.
One of the safe harbors.
Safe harbors, yes. And it has been interpreted to be that if the state or local government is following the CDC, HHS, or OSHA guidelines, that qualifies also for that safe harbor.
Okay. And one other one that I saw here that I hadn't gotten to yet, would the employer paid HSA contributions be made during the covered period be eligible as a payroll cost? And I couldn't remember if HSA payments were or not. I don't remember them specifically being addressed.
I don't believe so.
Yeah, I thought not, but I couldn't remember for certain.
Right. I believe it's just the health and the retirement benefits.
And then the actual compensation, right?
Correct.
Okay.
Yeah.
Okay. Okay, good. So I think most of the questions we've kept up with as we're going along here, but one question that did come up, if you're not online and don't see the chat, is will we get the presentation slides? And so, yes, those will be made available, and our marketing department, I guess it's going to be Austin's going to reach out to those of you who attended today, and thank you for joining us. And then if you would like to receive those, he also provides an evaluation so you can help us to define our sessions as we go forward to make sure we're covering the things that people want to hear about, et cetera. But also he can send you that slide deck, and I think the recording comes with it as well. And then don't forget that if you want to find any of this later, if you go to that COVID tab on our website, a lot of these recordings are there also. They may not be up there just yet. I think this last round we did 2 of these last week, and those are not up there yet, but lots of other blogs and things like that on there as well. So I think I got, okay, great. So those folks who asked those questions jumped back in and said thanks, so that's good. So I think I've got everybody online on the chat as we've gone along, but if there's anything that we did overlook as we went through it, you can obviously, reach back out to us. And I think Brenda, at the end, it shows our emails, as well as, of course, so Brenda was going to talk about this here too, because this is a new thing that we just did.
Right. So on our website, at this link here, there is an Excel spreadsheet, very detailed, that would be very helpful to anyone who wants to use it, to go through the process of reviewing the application, following the steps in there, managing their data, etc. So even if you don't think you would use it, I would suggest that you check it out, because it might help in understanding some of the nuances and the concepts in the application itself. I found the application somewhat challenging to work through, but actually looking at the data in the spreadsheet here, the way that the data are collected and then how they're rolled together, really helped me in understanding. So I highly recommend looking at it at a minimum and going ahead and dropping your data in and using it to see where you come out. You might even use it to check, if you've already gone through the application. You might even use it to check what you've done. It's worth the investment.
Good idea.
Okay, so that wraps it up. Thank you all for joining us today. If there aren't any other questions, I guess we'll end the webinar. Thanks a lot.
Sounds good. Thanks, Brenda. And then again, there's our email addresses. You can reach out to us directly, or you can reach out to us through the website, and we will hopefully be here to answer all the questions that you have. I know they're coming fast and furious, and things are changing all the time, but we want to be here to help you get through it as best we can. Okay? All right. Thanks a bunch. Thanks, Brenda.
Thank you.